Hola mi gente, welcome back to the channel. It's your boy Sean and this is We Are Investing, a channel that's dedicated in investing and personal finance. And on today's video, we're going to do another recap on SOFI stock because things are getting very interesting and I like what I see. So with that being said, I think this is the third video on SOFI. The first one was when the stock was pushing $25 and why I thought it was going to drop. The next one, we did an in-depth analysis of SOFI stock at around $18 and we set up an ideal entry price for this company to keep an eye on. On this video, we're going to reiterate that entry price and we're also going to take a look at some strategies that I think are going to be very beneficial if you're looking at SOFI. Now, I like SOFI because it has a lot of hype. A lot of people are following it. And I do like the valuation at a certain price. The thing I love about SOFI is with that hype and so many people following it, the implied volatility for this stock is quite high and you could be selling options and making a decent amount of money by selling options, being the writer of the options contract. That's because there are a lot of people that are now new to the stock market. They only been investing or trading for a year since the pandemic and they are buying crazy options for a high price. And the options market works both ways. There's a writer, a seller of a contract, and a buyer of a contract. And you can be the seller of contracts and make money doing that. And that's the kind of strategy that I think is going to work best for SOFI. So I'm going to explain in more detail in this video, but that's one reason why I think this stock is going to be good for a lot of people's portfolio and you can make a decent amount of money on this stock with relatively low risk. And the price right now makes it very attractive to most portfolios because it's not an expensive stock. And to get exposure to 100 shares isn't going to kill your portfolio or make the position way too big for your portfolio because you don't want to own one stock and have it be 30-40% of your overall portfolio. It's just way too risky and it's not the smart thing to do. Please know that WEBULL right now is running an exclusive promotion. The link to it is down below in the video description. You have to use that link. But when you use that link and open up an account with WEBULL and deposit $100, you can get 2 free stocks worth up to $2,300. And WEBULL is a great brokerage. It starts trading at 4 a.m., closes at 8 p.m. You're not going to find those hours anywhere else, and there's no commission on stocks or options. So it's a stellar platform. There are a ton of features that I think you're going to really like. I wouldn't be recommending it if I didn't like it myself, and I personally use WEBULL. But with all that being said, let's dive into this stock. All right, mi gente, let's dive right into it. So my entry price point for SOFI is around $12 to $13. Now you might be thinking to yourself, that's crazy. The support's at 14. It's never going to get that low. What are you smoking? Well, my analysis is not based off of the technicals. It's based off of valuation. It's based off a price to sales multiple of 8. And a price to sales multiple of 8 is not a low price to sales multiple. This company is growing revenue very fast. And I love that about SOFI. And I am still projecting a lot of revenue growth in my analysis. I'm saying in 2021 is going to be 60%. That's basically guidance. Guidance said they're going to make around $1 billion in revenue for the full fiscal year of 2021. In 2022, I'm saying that revenue is going to drop because revenues have been dropping year over year. The rate has been dropping or slowing down year over year, as expected. It's the law of large numbers. As the company gets larger and larger, it's going to be harder and harder to keep the revenue growth high. So the law of large numbers suggests that each year, as the company gets bigger, the revenue growth is going to slow down a little bit. I'm assuming that in 2022, it's still going to be 50%. That is still great growth. And we're going to see revenue at around $1.5 billion. Using that number and trying to come up with a fair price to sales multiple, I think 8 is fair. 10 is on the higher end, and some other fintech companies are getting a price to sales multiple of 10. But margins are a little bit less for SOFI, and SOFI is spending a lot of money to acquire customers right now. So I think a price to sales multiple of 8 is fair. That puts the price of SOFI at $15, which is pretty much where it's at right now. But I want a required rate of return of around 20%. So where does that put me? That puts me at getting into the stock at around $12. Another approach that I did was a price to sales multiple for the trailing 12 months, and that would get me $12.51. So based off of that, I am comfortable getting into this stock long at around $12 to $13. Now that may never happen. It may never get that low. I'm not going to be just sitting on the sidelines waiting for the stock to get to $12 or $13. There are things that I can be doing now. I can be proactive and making money off of SOFI as I wait for it to get to my ideal entry price. And that leads me to the first thing that I could be doing. And then if I get into a position and let's say it gets to $12 to $13, we'll discuss what I'll be doing after that. But I'm going to be using that options chain because we talked about that implied volatility for this stock. And I'm going to be selling puts against this position. Now at the $13 strike, I could be selling them $14. I can do this every single week until it gets to below $13, and then I could buy 100 shares of SoFi. At that point, I have a decision to make. This is called selling cash secured puts, and it's a great way to make money as you wait for a stock to get to the price that you're okay actually taking on a position of 100 shares. And that's what I'm going to be doing for SoFi for the foreseeable future. Now, let's say that it actually does get to my price target and I actually have to take on shares. Well, at that point, I have a decision to make. Do I take on those 100 shares and just hold them? Do I take on those 100 shares and sell covered calls to try to make money on selling calls? Or do I take those 100 shares, sell them to the market right away, and then get into some leaps and then sell some poor man covered calls? That's a decision I'm going to have to make when that happens. But that sets up the second strategy. Covered calls or poor man covered calls, they work the same way. The capital needed up front is cheaper for a poor man's covered call, and that's why it's called a poor man's covered call. And the same thing with the implied volatility, and we take a look at SoFi, you can be selling options, call options for a lot of money every single week. If you take a look at the $16.50 strike, you could be selling them for close to $30 each week. The $16 strike, close to $40 each week, and the $15.50 strike, close to $60 each week. Now, let's say that my cash secured put is in the money and I take delivery of 100 shares at $13. Well, my all in at that point is $1,300. At that point, depending on what the stock is trading at, let's say it's trading at $12.50. I can sell the $14 call and make whatever it's going to be. At right now, it's $1.50. It's not going to be that high when the stock is trading around $13, but it might be 60 cents. I could sell 60 cents each week, and if the stock was to suddenly go up to 15, I could sell out of my position and still make money. There is no risk to me at that point. And each week as the stock moves higher and higher, I can adjust my strike price and just put it 10, 20% out of the money and do this every single week. If you're talking about $60 every week for a position that costs you $1,300, you're going to be netting around 4.5% every single week on this stock just by selling options because people are paying ridiculous prices for them because we have a bunch of noobs in the stock market. The other thing you can be doing is you can be selling a poor man's covered call. And what option would you buy or would I buy to be selling that poor man's covered call? Well, depending what these are selling for when the stock is $13, I do not know exactly, but my guess is that this is going to be $7.50. And the delta is still going to be around the same, maybe a little bit less. So let's say it's a 0.9 delta. I could buy this leap, which is just a call option that is deep in the money and has an expiration date that's far out. And then I can go ahead and sell the same call options that we were just talking about. And in that case, the return on your money is going to be far more. We're talking about 60 divided by 750. We're talking about an 8% return every single week. The downside to that is that your potential upside is cut by 10%. It's whatever delta is. So that delta is 90. Your leap is going to move up 90 cents for every dollar in the stock. So that's going to limit your potential upside. But still, the risk is well defined. You're going to be making money every single week. And it's a great strategy for SoFi. I honestly believe that this is one of the best stocks if you are new to options trading and you want to learn how to sell options to make money on your position, because this stock is trading at around $15 and the implied volatility is quite high. And I personally am bullish on this company and think it has potential. This is a great stock to be doing this because it's a win-win-win. There are many ways to make money off of this stock with it just staying flat, with it moving down a little bit. If it moves up high, you're going to make money. I just love how risk is negated in so many ways when you buy a stock like this and use these types of strategies. But anyways, let me know in the comment section down below what your thoughts are for this stock. Let me know if you are selling options against your position. And if not, why? Just let me know in the comments down below. All right, mi gente, that pretty much wraps it up for this video. If you want that spreadsheet to plug and chug your own numbers to come up with your own price target, you can get access by joining the Patreon. It's $5 a month. You get access to spreadsheets like that. You get access to a Discord server of over 500 investors. And you also get access to weekly reports of the top stocks that I'm eyeing up. The link is provided down below. I'll catch you all on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.